Welcome to Behind the Business, the podcast where we cut through the noise and get real about running a profitable business. I'm Pamela Hilton, CPA, with over 30 years in accounting, tax, payroll, and business advisory services. Each week, I will share stories from the field, answering real questions from business owners, and give you the straight talk you need to grow and protect your business. No fluff, no hype, just practical advice that works in the real world. So, let's get to it. Welcome back to Behind the Business. I'm Pamela Hilton, CPA. If you were faced with a scenario, if you had an IRS notice or you're going for a loan for your business and the IRS or the bank asked you to pull together some documentation for them, could you pull it together within 24 hours? So here's the reality check. Your income alone doesn't protect you. It's the documentation that does. Today, we're going to break down exact documents you need for your business and why Venmo screenshots just don't cut it. So here's what most business owners think. They think that they can just go log into their bank and download their bank statements, and that's sufficient documentation for their business for the year. And that really isn't enough. Your bookkeeping, it tells a story, but the documents you have is the proof. It's the proof of that story. Every transaction needs three things. It needs the source document, which is a bank statement, a credit card statement. It has a purpose, the receipt or an invoice, and the reason why it's business related, what you used that transaction for. Today, I'm going to tell you about all the different types of business documents and why they're so important. So let's dig in. Bank and cash flow documents. So these are the backbone of things. Bank statements, credit card statements, loan and line of credit statements, merchant processor like your Stripe, Square. All of these things you need to be downloading every single monthly statements. And yes, you have access to them online, but these expire, right? You only have access to them for a certain amount of time. Your bank and credit card companies only keep 2 or 3 years worth of statements online at a certain time. So you need to download those. These are business documents you have to have as part of your record. So download them, keep them in a folder on your computer, back it up. And here's another thing. If there's an error on your bank or credit card statement, you only have a limited time to dispute those errors. Sometimes it's as little as 3 to 6 months to go to your bank, go to your credit card company and dispute that error. And if you're not regularly reconciling, checking those bank and credit card statements and downloading them as proof of the error, you're out of luck. So those things need to be done as a regular part of your business routine, downloading them and saving them. All of these documents show the movement of the money, the ins and outs, but not why the money moved. So these are a good first step, these bank and credit card statements and bank documents, but they're not the entirety, okay? The next one's income documentation. So these are things like customer invoices, sales receipts, deposits. If you have people who pay you in cash and checks and you have to go to the bank, deposit receipts, 1099s, any 1099s you receive from people at the end of the year, payment processor summaries if you're using Stripe or Square. If you're using true accounting software, that's going to do a lot of the heavy lifting. You're going to see a lot of that. The accounting software is going to store a lot of that information for you. But if you're not, then you're going to need to save all of this information somehow. In Venmo, these payment apps, Venmo, PayPal, we encourage clients not to use that. I'm going to go into a little bit more later on in the podcast because there's not enough of an audit trail. It's not going to give you the detail reports you need to save for IRS purposes, business purposes, bank loan purposes. So using true accounting software, using other sources for your payment processing and accounting software is better for your business overall. Okay? Expense documents, purchase documents. Receipts for expenses, vendor invoices, major purchases. If you're buying a new car, a big piece of equipment for your business, you're going to need a bill of sale and the corresponding loan documents that go with it. Contractor or service agreements with major vendors. Bank statements alone are not going to prove the deductibility of an expense. You need the receipts, and I'm going to give you an example here, a real client example. So I had a client who had an audit and they requested their cell phone bills in the audit because they wanted to see on the cell phone if they were deducting family member cell phone expenses, or if the cell phones on that cell phone bill were employee and owner cell phones, or if they were family member cell phones. So in certain circumstances, you need the actual receipts for your expenses. That's always the best case. Keep all of your receipts. So if you have a document capturing, taking pictures of your documents, or saving the actual invoices, that's really the best way. Legal and entity documents. These are really the most ignored, and they're often the most critical documents I see. Your articles of incorporation, your annual reports. Most times, if you're incorporated with your Secretary of State, you need to file your annual reports every year. Print those and save those. Your EIN letter from the IRS. When you apply for your federal ID number, you're going to get an IRS letter with your federal ID number. That's an important letter. These are what's called, anything in this legal and entity document category, we call these permanent file documents, where you have to keep these kind of forever, for the life of your business. Business licenses and permits, those need to be saved. Any kind of partnership or ownership agreements, bylaws, things like that are permanent documents. You save these forever. Another one that comes up an awful lot in my practice is S corporation. If you are electing to be an S corporation with the IRS, they send you a letter in the mail acknowledging, accepting you as an S corporation. That's a critical letter. We need that S corporation letter from the IRS acknowledging that they've accepted your S corporation filing. That's so important. So all of these documents prove your business exists in one way or fashion, how it exists, and the banks are going to require this. Auditors are going to require this. Investors, if you are selling your business, these are things that are going to be required for selling your business, for succession planning. All of these things are going to be really important if those things come up. And going back and trying to find these or recreate these documents, or trying to go back to the IRS and get copies of these documents, delay that whole process. Next, payroll and contractor records. This also comes up an awful lot because I see businesses hop from payroll company to payroll company. And once you do that, you lose access to your payroll reports if you flip from payroll company to payroll company. On a monthly, or at least on a quarterly basis, I encourage my clients to download and save payroll summaries, tax filings, all your quarterly 941s, state unemployment, state withholding filings to prove that the filings were made and the payments were made, W-2s, W-3s, contractor invoices, W-9s and 1099s that you've issued. You should also always have access to EFTPS, your EFTPS online account, to prove that your payroll company was actually making the payments for your federal tax payments. Your state withholding online account, your state unemployment payment online account. You as the business owner, even though you're using a third-party payroll company, should have online access to these portals so that you can see and verify that your payments are being made, your quarterly filings are being filed, because you as the business owner are ultimately responsible. Even though you're hiring somebody to do that, you're responsible. And you should be checking on that, and you should be downloading all those reports, because again, these payroll companies are only going to have access and save those reports for a certain number of years. And if you cancel with one payroll company and you start with a different payroll company, your former payroll company will restrict your access to those reports. You're not going to have login anymore, and you won't be able to access those reports anymore. And those are critical documents, especially when you're talking about employees. If you ever got audited, you're not going to be able to produce those documents for that audit. And the thing about audits is this: they are so far behind. So if you got an audit notice, it's not going to be for this current year. It's going to be for 2-3 years ago. And you have to go back and find and produce those documents for a few years behind and try, and who remembers that far back? And then you have to go back and try and recreate all those documents. So that's why I encourage people to stay current, and it's a pain, but stay current and downloading all of these things on a regular basis. Make it part of your routine so that if you are ever encountered with an audit from way back, going way back, you don't have to go back in your time machine. All right, tax and compliance records. So it's standard practice to keep these things for 7 years, but I tell people, tax stuff, the statute of limitations on audits is this. It's normally 7 years, but if the IRS and a state agency can show willful fraud, there is no statute of limitations. So keep it forever, stick it in a box, put it in your basement. Income tax returns, save those. Supporting documents for your income tax returns. Prior year depreciation schedules. This one is, we don't like to print out really bulky returns. Like, nobody wants to receive a tax return that's like 60, 70 pages. So we don't always print out depreciation schedules unless somebody requests them. So if you do have a business, request the depreciation schedules. Sales tax filings, tax notices, federal and state tax notices. Keep all of those things. Payment confirmations for all of your income taxes, especially if it's a tax notice. I encourage clients to go online and pay for these things online, because then you get an immediate payment confirmation. If you're going to pay by check, take a copy of the check before you send it so that you have a copy of the check number, and you have a copy of that in the event that it gets lost in the mail. And if it gets cashed, make a copy of that it got cashed from the bank statement to prove that it was sent and it got cashed by the IRS or your state agency. So keeping those records and covering yourself is so important. It's a pain, but trust me, it's more of a breeze when I'm responding to a tax notice from a client and they have all of these things ready. It's such a breeze to just fire off a letter saying, hey, yep, my client paid and here's the proof, and attaching it to a letter. It resolves itself very quickly. Conversely, if I have to deal with a client who doesn't have any records, it can drag out months and months trying to have the client find these records, and it's very painful and it's very stressful. So to cut down on all of that, having your business documents in order, and again, making it part of your routine, it'll just become a habit. Okay, so just a quick note again on why the payment apps are not your best friend when it comes to business documentation. These things are payment apps. They're there for convenience, and they're really meant for personal transactions. They're not an accounting tool. They're not meant to be a business tool. They don't have standardized reports. You're going to be mixing, even though there are business apps for Venmo and PayPal, the descriptions are informal and inconsistent. There's no clear, what we call audit trail, which is a paper trail. It has a timestamp. A true audit trail has formal reports that are very clear to read. It has very clear links to your accounting software, and it has very clear transaction. It'll have a person's name, date, amount, what it's for, that sort of thing. The IRS and banks want reports, and not just these screenshot type reports. with emojis. You know what I mean? It's not as professional. So what should you do instead? You should have separate bank accounts at a minimum. If you know anything about my podcast and my social media, that's one of the things I preach. When you start a business, that's the very first thing you should do. Separate your business stuff with a business credit card, business bank accounts. Real payment processors with reports, Stripe, Square, those sorts of things, those sorts of payment processors. Link those with real accounting software, not these apps. Xero is the software that we use for our firm, and it's the software that we have all of our clients on. A receipt capturing system where you can take a picture of it and link it, upload it to your accounting software, or keep it in a folder on your computer and save it every year. And then a mileage app. That's the only kind of app we would suggest for your business, because you'd have it in your car with you on your phone. A mileage app to keep track of your business mileage. It's more professional to have all of these tools and have the business stuff, real business tools and real business software, less stress, easier for tax prep. It's much stronger protection, and it's better cash flow visibility wise if you have all of these things all linked together, and you don't need to recreate the wheel here. The accounting system, the accounting software has been around for thousands of years. You don't need to recreate the accounting system. Okay? So the real world consequences for poor documentation, and this is just, it's fact. Lost deductions, denied loans. I've seen this so many times. Delayed tax returns. I live this every year with clients. Higher tax bills. See it every year. Audit exposure, again, see this all the time. The cleanup fees, how much people have to pay me to clean up their things. And again, I see this every year. Disorganized records will always cost you more. Always. I know it's probably, when you're first starting out your business, it's a bigger expense to hire a professional to do your books, to have the real accounting software. You're trying to look to cut some corners, but trust me, if you put this into your budget when you're first starting out your business, it will save you more money in the long run than you can imagine. If you have set up these strong business habits in the beginning with strong accounting software, having strong advisors, having a really good habit of keeping the business documentation that you need for your business and creating that business habit, you are going to be far better off than other business owners in different situations. So if you want a copy of my business owner's documentation checklist, there will be a link in the notes to the podcast, and it's also going to be on my website, PamelaHiltonCPA.com. It's a summary of everything that I went over in this podcast, and it's a nice little checklist for you that goes over all of these things and the reasons why you need them. So I hope you thought this was helpful if you're a business owner and other business owners who could benefit from more information on what they need to have a solid business and the documents they need to do that. Share this podcast with them so they can get a copy of the checklist and why it's so important for them. So see you next time on the podcast, and good luck with your business. Thanks for listening to Behind the Business. If you found this episode helpful, please share it with another business owner who could use some real world advice. For free resources, tools, and to submit your own business questions, head on over to my website, PamelaHiltonCPA.com. Until next time, keep building smart and keep looking behind the business.